The Indian market opens a new week and a new month in the green with the IT and metals leading the gains, mid-caps relative outperformers. In fact, as we speak, at the high point of trade for all the frontline indices.
Wipro surges close to around 2.5% after brokerage firm CLSA double upgrades the stock from underperform to outperform and raises the stock price from around 431 rupees to 607 rupees, expecting discretionary demand to stabilize.
PVR climbs more than 5% on the back of strong collections from the blockbuster film Kalki 2898 AD.
JB Chemicals climbs close to around 2.5% after a brokerage firm, Kotak Institutional Equities, initiates coverage on the stock with a buy call and a target price of 2,025 a share. They're expecting 19% compounded profit growth till 2027.
Garden Reach Shipbuilders jumps nearly 10% after the company wins a $21 million order from the Bangladesh government. You're watching us here on Chartbusters on CNBC-TV18. As you see, there is a fair amount of confetti. We're world champions. T20 World Cup is what we achieved. I'm Mangla Malu, and with me joining back after a break is Nigel. Nigel, you go back on a break, come back as champions.
Yeah.
And what a great moment this is. You're standing next to Rohit Sharma there.
Absolutely, Mangla. You know, I'm sure the streets, you all must have been dancing on the streets. I was away out of the country in Kenya. But I'll tell you what, I saw it on a small screen on my mobile phone. What a feeling, And particularly when you thought it was slipping away and the boys pulled it back, pumped. I mean, nothing more to say.
Nothing more to say. It was Diwali, Holi, every festival put together on Saturday night. And that's exactly how everyone felt. And that's what the market is reflecting as well, I guess. We've seen a big rally and that rally continues.
Well, that's right. And kudos to, Rohit Sharma, Virat Kohli, as well as Jadeja. They have done us proud, and they're moving on from the T20 arena. But, I mean, champion stuff. Champions in there. For me, the hitman, just cool as a cucumber, walks into any situation, marshals his troops. I love you, man.
Everyone does. Everyone does. The most beautiful thing about the person, he takes his job very seriously, but not himself as seriously, which is what, brings a wonderful blend of both skill as well as entertainment. That's what cricket is all about. That's what life is all about. So let's move on and let's talk about everything else apart from what a wonderful weekend that was. And for Nigel, what a wonderful week that was from a holiday. Let's welcome Shivangi Sarda. She joins in for a quick technical check on the market. Shivangi, a great cricketer, Virendra Sehwag, said that this was a breakout moment for the Indian cricket team, and going forward, there will be further new highs that they will achieve after some 13 years of consolidation. What do you feel about the stock market? It's been broken out already, and it's continuously making newer highs.
Very good morning, Manglam and Nigel. Thank you for having me, and welcome back, Nigel. So yes, we did happen to speak to Viruji and, here at our firm. And of course, it's lovely to see that, he's using the analogy of stock market in his game, which we used to do here. We used to use the analogy of cricket here to explain the stock market. So, tables are turning. But of course, Nifty is, holding on to its higher zones. And we've touched a psychological 24,000 mark last week, after which we've seen that slight profit booking was there at the higher zones. But then, of course, the bulls have created a good base at the higher zones, and the put-call ratio is also quite improving. Over and above, we expect some consolidation at these levels because we've seen a good rally in the last 1 week. Now, moving on, India VIX is also quite comfortable. So we are looking at 24,200 and then 24,400 levels on the index with a support of 23,800 levels. Now, talking about Bank Nifty, definitely, there has been a catch-up rally in this series, a good short covering move, especially in the heavyweight stocks. Now, the good part is that it's consolidating at the higher zones. However, rollover were not quite impressive. But overall, we are seeing supports are gradually shifting higher for this rate-sensitive index as well. So we are looking at, 53,180, the recent lifetime high level, as the next level for Bank Nifty, with a support of 52,000 levels.
Okay, all right. Hi, Shivangi, and good to see you, Ben. Viru G, Kapil G, I think you'll have been speaking to quite a few cricketers at your firm. So, keeping pace with both the stock markets as well as the cricketing action. Tell us your individual stocks, though. What are the calls you have for us for today?
So for individual stock, my first pick is from the IT name, one of the strongest names here. Dixon is what I'm looking at. And it has given a consolidation of the last 8 session. We've seen a long build up over here, from the previous series, and 93% rollover from the June that we are carrying into. And the entire IT pack is into revival mode, and this stock is sure to benefit from the same. So recommending a buy here with a target of 12,900 levels with a support of 12,100 levels. Now the second pick would be Grasim. This stock has given an inside bar breakout on the weekly chart. The stock has given a breakout of the last 7 weeks, and follow-up can be seen thereafter. It's given a consolidation breakout on the daily frame as well, and is forming higher tops, higher bottoms. Now, buying is visible across the cement space from the last 1 week, which will, of course, support the ongoing up move. Stock has been a performer this year, and it is, sure to continue this journey northwards with fresh longs being carried over from the June. So recommending a buy here with a target of 2840 levels with a support of 2650 zones.
All right, take that point. Thank you so much, Shivangi, for joining in and giving us your views. Meanwhile, a bunch of stocks which are now spiking higher. We have J. Kumar Infra, which is up around 8%. So before we slip into a short break, just pull up a couple of these, stocks. Root Mobile is another one. Has been doing well this month. In fact, over the last month or so, it's up about 30% and adding on to the gain. So you have Root Mobile doing extremely well. J. Kumar Infra up around 8%. GMM Pfaudler is the other one, which is spiking. And Jyoti Labs too. So a lot of these second-rung FMCG names, you have the likes of Imami, Jyoti Labs, all of them moving higher.
Mangalam, just a few more of these stocks which you track quite closely as well. TTK Prestige, the stock is now up close to around 5%. Stovecraft, and I think in the last 1 month or so, the stock is up close to around 25%. So both those two should come up for you. That space seems to be buzzing. Some interest coming back. I think last year was a flattish year for most of them, or maybe a bit of a degrowth. But, both those two spiking up. Let's see what the results do. For the time being, spiking and volumes as well quite high.
Hopes of, improved demand, etc. And also maybe at some point the government gives some stops for or increases the, increases the spread of the Ujjwala scheme.
Yes.
Which if that were to happen, then maybe, these guys would benefit from increased demand for those products out there. So let's see how that pans out. But let's get you some more ideas for profit coming in from our colleagues at Money Control Pro. Today we have Bharat joining in with a stock that he's been tracking. Bharat.
Today's idea is with Thangaman Jewelry Limited. The jewelry demand continues to remain strong despite an increase in the gold prices. In fact, on the festival of Akshaya Tritiya last month, Thangaman Jewelry witnessed a sales growth of 45% YOY, which indicates a very strong demand momentum. With the expectations of above average rainfall and increase in the Kharif crop MSP prices, this is positive for rural-centric jewelry players like Thangaman Jewelry. The company is aggressively expanding its store network and aims to add about 9 new stores in the current fiscal. The company also aims to enter the metro market of Chennai by Q4. Apart from the new store openings, the company is also renovating existing stores, which will improve the overall sales productivity. The company is also increasing the share of non-gold jewelry, that is diamond and silver jewelry. The jewelry market in India is witnessing an accelerated shift towards the organized segment. This is owing to the increased brand awareness as well as the mandatory hallmarking regulations. In fact, the scope for market share gains for players like Thangaman Jewelry is relatively high, as unorganized segment has a higher presence in the semi-urban and rural areas where Thangaman Jewelry operates. Thangaman Jewelry is amongst the few quality listed players in the jewelry space, having a reputed management, industry-leading store matrices, as well as return ratios. At the current market price, the stock is trading at a PE of 26 times FY26 earnings estimates. Investors can have the stock level.
All right, thanks a lot for that, Bharat. We take a short break. On the other side, we talk about PVR. That stock has been buzzing a lot on the back of that blockbuster weekend from Kalki. We'll get in Abneesh to give in his view on that space, the sector, and a lot more. Stay with us.
Welcome back. Keep an eye out on the screen. You know, besides these telecom companies that have gone ahead and taken some price hikes, and some of them have come in for some profit taking, Indus Stars, that's the one that's bursting away. That overhang, it seems, has gone out of the way. Now the street is bracing for better times. And with Vodafone Idea going to survive with these price hikes as well as the funds that have come in, that one is spiking up on rather large volume. So it's up close to around 3% as we speak. India Bulls Real Estate as well, that's another one that's up close to around 3.5%. Just want to highlight a couple of these names. And Vodafone Idea actually was down. That's done a bit of a U-turn. Now it's moved into the green. But let's talk about the blockbuster release over the weekend. That's Kalki. And post the release and post the collections that we've seen on the weekend, PVR, that's a stock in focus. We have stunning numbers coming in over the last 3 days or so. And Nuvama, well, they have also suggested that collections have crossed massive numbers. So let's get in a sense. We have Abneesh Roy, Executive Director at Nuvama Institutional, who joins us. Hi, Abneesh. Thanks a lot for joining in. Well, you have been maintaining this positive stance on PVR, and the collections are justifying that. Give us an updated number first. What are the collections, and where do you expect the number to wind up at for Kalki?
Yeah, thanks. Good morning to the viewers. Currently, if you see, the collections is around 300 crores net, and gross box office collection India is around 345 crores. Our sense is this movie will end at least 2x of the current amount. So we are expecting 750 crores to 800 crores gross box office India collection. Net India collection will be around 15% lower because of the taxation. So very strong numbers. I will say Street was disappointed on Friday. If you see, the stock had corrected on Friday, and rightfully so, because on Friday, the number was 57 crore collection, which was almost 40% down versus the previous day. In our view, that was not a concern because in Hindi, no drop had happened. It was just a drop seen in Telugu, and that was because first day, the audience response is higher. Now, going ahead, definitely we are seeing very strong content next few months. So, in fact, this week we have a Ajay Devgan movie, Oro, releasing. And after that, we have got two Akshay Kumar movie, one in July, one in August. We have got strong Hollywood content of Deadpool and Wolverine also. And then we have got Transformers. In the regional, also very strong action happening. We'll have Indian 2 releasing, Kamal Hassan movie in July. And then currently one Punjabi movie starring Diljit Dosanjh is also doing extremely well. So all-round revival. So first 2 months of Q1 was very weak. So April, May was one of the weakest months in recent times. So cricket, temperature, everything was a concern.
All right. Abneesh, just wanted your view on a couple of things. One, you said the first 2 months were weak. Of course, there was the IPL. Now, over the weekend, we had the World Cup finals as well. All of that getting done with no immediate large sporting action ahead. Do you believe all the way up to Diwali, there is a free run or a free passage for all these movies that are coming in, and as a result of which, we could see higher collections, higher occupancies, and perhaps higher spends per head as well?
So currently, if you see yesterday, for example, post the World Cup euphoria, we saw very strong occupancy in the movie halls. I think in terms of the prime weekend post 6 p.m., our data suggests 90% plus occupancy, and the full day occupancy was also around 55%. So very strong current occupancy. Coming to a specific question, I think two things are required. One, content has to click. Second is, of course, marketing. For example, the Ajay Devgan movie, which I mentioned, Oro, currently the marketing is very weak for that. So I think both the things will be required. But yes, from a competition perspective of mindshare of the customer, there is no election-related news flow, which was taking huge bandwidth earlier. And similarly, if you see Cricket World Cup and those issues are also not there. But ultimately, we are seeing in Hollywood and regional, the movie pipeline is excellent. Our report of last week, we have detailed till the next 6 months, 7 months, every month, we have got 1 or 2 blockbusters in Hindi, English, and in regional also. So yes, it looks exciting, but the content has to click differently.
Abneesh, but you can correct me, but in the next few months, I don't think we have any big release from any of these mega superstars here in Bollywood, the Khans, or I don't know whether Akshay Kumar's movie is there, but tell us which are the 1 or 2 that you're looking at which can break in that big 5,000 crore, 500,000 crore kind of numbers.
Yes, definitely. If you see Akshay Kumar, 2 movies are there, one this month and one next month, Sarfira, and then yes, absolutely. And similarly, Dharma production, we have got bad news, in fact, in July itself. In fact, Hollywood, there was a strike last year. So now we are seeing the positive fallout of that every month we have got very good movies. So I would say that that is not a concern. I would say marketing is required. Multilingual definitely works. So in case of even Kalki, if you see, on Friday, Telugu collections were weak, but Hindi and rest of the languages were quite strong. So I would say the multilingual starcast is also very important. Marketing is also extremely important. And lack of competition from news, sports is also there. So yes, we have strong starcast movies also, strong Bollywood also, and strong regional also in the coming months. So it's looking good. Plus, what we are seeing is PVR is focusing on free cash flow, net debt reduction also. And it has also tied up with Devyani for the food court. So doing a lot of positive steps, plus advertising should recover from here. So it's looking good, 10 times EV/EBITDA multiple. So valuations are also reasonable. If we have this kind of a blockbuster every month, I would say the stock would see very good times.
All right, let's see how that pans out. So, just before we let you go, Abneesh, two questions. One, what is your call on PVR when it comes to a target price? And secondly, what is it that can derail your thesis of a buy on PVR right now? Because like you pointed out, yeah, there are 2 Akshay Kumar movies, but the last 7 or 8 Akshay Kumar movies have not been, setting the box office on fire. Kalki, great collections, yes, but Kalki is a one in a many year sort of movie with, that period setting. It has Nagarjuna, it has Amitabh Bachchan and all of them. So what numbers are you looking at in terms of collections from all these movies? And if they were below your expectations, would you perhaps revise your view on PVR?
So, very good question. So, yes, in PVR, unfortunately, every week the data is very important. So, sustainability has been missing. Last 4-5 years, if you see, movie industry has faced very tough times. We recently saw bankruptcy of one of the movie production houses in Hindi, for example, where they have had series of failures. So yes, I think the health of industry needs to improve, and that can come if we see 1 or 2 big hit movies, and then the funding will come back. So yes, definitely we are waiting for sustained revival. So if there are 1 or 2 movies which don't do well, then I would say that again the risk of the de-rating will come back for the PVR stock. But I would say the probability is very low because, as I said, this year, English movie also the content is very good. Regional, of course, there has not been much of a challenge. So overall, I would say 1995 is our target price. So I don't see much of an issue because if you see, most of the mid-caps have done well. This space, earlier the PE investors, the liquidity selling was an overhang. That is also behind. So a lot of the issues are behind, and this year advertising should scale up because of the general FMCG companies seeing revival also, plus auto companies also are looking to launch more launches. So yeah, those are the positives. But yes, there is the Friday data, which is very important. That remains a point.
Okay, all right. Thanks a lot for joining in, Abneesh, and giving us that quick take with regard to PVR as well as the big blockbuster of the weekend, Kalki. We look forward to chatting up with you as things progress. Well, for the time being, let's slip into a short break. Come back. We'll continue to focus on markets. We'll also highlight a few stocks that are moving around.
Point of trade, quite an uptake actually after brokerage firm CLSA has double upgraded the stock from underperform to outperform. Rima joins in with their rationale and the view. Rima.
Thanks so much for that. So it's a double upgrade by CLSA on Wipro ahead of the earnings. CLSA now has an outperform rating on Wipro with an increased target price of 607. There are 2 key reasons. One, remember there is a new CEO on board, Srinivas Palya, and CLSA says there are initial signs of execution success around large deals. So in the quarter gone by, Wipro announced a large $500 million plus deal win. So that's reason number 1. Secondly, there is a probability of a buyback announcement. So these are the 2 factors why CLSA is bullish on Wipro now. They're expecting a 0 to 2% guidance in Q2 FY25. They've increased the EPS estimates by 13%, and they've also raised the fair target multiple from 18 times to 22 times on Wipro. Back to you.
All right, Rima, thanks a lot for that. Meanwhile, just keep an eye out on Patanjali Foods. While all the FMCG stocks are doing well, Patanjali Foods has actually moved higher by about 3%. And remember, the management, when they joined us last time here on Chartbusters itself, did indicate that they are looking at merging the non-food business of Patanjali Ayurved into this company as well. And if that were to happen, then maybe, there would be a scale up in their revenues and business performance itself. So that's something that the street will keep an eye out on. The other one that is spiking right now as we speak is Go Fashion as well. At the high point of trade, we're seeing decent traction there. Kajaria Ceramics, a lot of these building product stocks have been doing well over the last few trading sessions. And alongside that, we have All Cargo Gati, which too, from the red, has moved into the green. Take a short break, come back, and with that, you'll have the team of Trading Hour, a show which comes up next. That's it from Nigel and me on Chartbusters.